something that was a big focus for Hot Chili was that our high-grade component of this very large resource base, a dominantly open pit on the coastline at about 0.5% copper equivalent, that now stands at close to 170 million tonnes, running 0.8% copper equivalent.
Hello, welcome to Assay TV. Today, I'm delighted to be joined by Christian Easterday, who is the CEO and Managing Director of Hot Chili, an ASX and TSXV listed company focused on the Costa Fuego Copper-Gold Hub in Chile. Christian, great to see you today. Costa Fuego, already rated as one of the world's top 10 undeveloped copper projects, just got a lot bigger. With a new resource estimate upgrade. Tell us a little bit about some of the highlight figures from that.
Yeah, great to see you again, Leo. It's been a while. A very exciting morning for us at Hot Chili, something we've been working towards for about 15, 16 months, a major resource upgrade on our coastal copper gold project, Costa Fuego, as you said. A huge amount of investment and a really, really big effort by the team to achieve everything that we were looking to achieve on time and in guidance. So I guess some of the headlines, we're pushing the total resources. We pushed them to 927 million tonnes. But really, I guess the core of what we have achieved is a very, very significant upgrade in our indicated resource base that has seen 67% growth. Sits at almost 750 million tonnes in indicated classification. And what's very, very pleasing and something that was a big focus for Hot Chili was that our high-grade component of this very large resource base, a dominantly open pit on the coastline at about 0.5% copper equivalent, that now stands at close to 170 million tonnes, running 0.8% copper equivalent. And for bulk tonnage resources, that is a very, very strong grade that gives us a lot of flexibility on having a very, very high value front end to this multi-decade project we're looking to put into production in the coming years.
Absolutely. And as you mentioned, you've had a lot of success turning your inferred resources into indicated, which will be, obviously very important for you going forward as you look to do a PFS, yeah?
Yeah, correct. We have the pre-feasibility on track to be delivered in the third quarter of this year. And so a really big focus for us was about converting inferred into indicated, making sure that the inventory was as real as it gets and could be converted straight into a mining reserve. So we've been doing continual assessments on open pit optimizations, underground cave assessments on the very large high-grade core that we discovered at Cortadera, which has really transformed this resource book. And so we've been very, very focused about how we drilled this deposit out and to enable us to maximize an ore reserve on this combined large-scale project later this year.
Let's talk a little bit about some of the work that's gone into getting you to this new resource. First of all, at Cortadera, big acquisition for you, obviously, really has made a difference in moving the numbers, yeah?
Yeah, that's right. I mean, the Hot Chili of the last cycle was known for our Productura discovery on the coastline, about 250 million tonnes that unfortunately we had the copper price moving out from underneath us as the rest of the copper market did for several years. But we really turned around the fortunes and reshaped the company dramatically when we took on that private copper porphyry discovery at the beginning of 2019. An acquisition that most people thought was a bit too much for little Hot Chili, which had just survived the downturn to take on. But look, serendipity has a lot to do with the market, and timing has everything to do with success. We started drilling it. It turned into a major discovery, and we discovered a high-grade core that is now really built out and has Hot Chili holding one of only two major discoveries that the world has seen since Kamoa was put to the market in 2014. So that is what has really transformed the resource book, has us sitting just under 1 billion tonnes of resource in place at the moment. And that was a big focus for us last year. We more than doubled the drilling into Cortadera. It was about growing it, converting it into indicated, and really starting to lift up the high-grade component of that ore body for our mining reserves to be put in place later this year.
Absolutely. And can you remind our viewers about your sort of mine plans for Cortadera? Open pit, yeah?
Correct, Leo. So the majority of this project is a very low risk, conventional, large scale copper project. It's open pit from surface, very low strip ratio, sub 2-to-1. We're expecting we may even be able to get that lower depending on the outcome of some of our metallurgical work streams this year. But dominantly open pit. We're looking to achieve a 20 to 30 year mine life is what we're envisaging. And most of that feed coming out of the open pit inventory. The high grade component sitting at about 170 million tonnes. The majority of that sits in our open pit inventory. So that large high grade component will really feature in the first decade of production, having very, very strong head grades north of 0.5% copper equivalent. And certainly the cave study that we're looking at integrating into this mine plan is around about an 8 million tonne per annum cave operation. So certainly not a very large cave operation, but something that allows us to access high grade bulk tonnes from year 10 going forward. And that enables us to put together a plus 20 year mine life where we can see consistent, strong head grades of production across all of these assets, which will go into one central processing facility.
But your exploration continues at Cortadera, yeah? And you have some assays pending as well. So tell us a little bit about what you're doing there.
Yeah, look, that's right. So I guess the backstory there is, we sit in a very strong position. We've got treasury of over 32 million in the bank at the moment, about another $10 million of inflow coming in this year. And what that means is we have 18 months of full funding for growth and development. So it may sound like a very large resource, and it's certainly one of the top 5 senior copper developments in the world at the moment, and certainly probably the front runner in terms of timeframes to production to build a new material copper mine for global supply. But what we do have is a land holding that I've been consolidating for over a decade that has not really seen any drilling outside of the 2 major discoveries in Cortadera and Productura, outside of the small high-grade resource that we just added today in San Antonio. So we have quite a pipeline of targets that we've been assessing for many, many years. We've now been able to prioritize about 12 large-scale targets, which we feel, with any success, would add a 3rd large-scale asset into this hub, and so that's exciting for us. Always good to look in your own backyard first, but also keep your eyes on potential other consolidation opportunities in the area now that we're focusing on probably building the largest scale copper project on the coastline that Chile has seen in certainly probably the last 20 years.
Absolutely. And let's talk a little bit about Productura and the work you've done there as well, because that's also gone into this resource upgrade, reassessing the old mineral resource there.
Yeah, correctly. I mean, again, Hot Chili was very well known for this discovery in the last cycle. It certainly had the company up and about when copper prices were last high, and we've been able to extract more value. It's really been able to give a lot more back to Hot Chili. We had the team working on Productura for about 18 months behind the scenes, looking at every aspect of the project. We had a mountain of data on that asset, 300,000 meters of drilling, very, very substantial. When we did our pre-feasibility on Productura, copper price had actually gone below $3 per pound. So we were cutting it with higher grades. We were using traditional wireframing approaches on the ore body. And subsequent to that, there's been several campaigns of underground development from lease miners in the area. And every time we looked at it, they seemed to find higher grade material than what we had estimated, and lodes that we had not found, even with a very systematic 40 meter by 80 meter drill out of that deposit. So we employed multiple techniques, looked across all of the data, and were able to bring that to a 2022 estimation with all of the modern techniques that you look at with probabilistic modeling. To cut a long story short, what that means, is that we were able to lift the high grade inventory for the open pit component of Productura. And that's really, really important for us, because that is the location where we're looking to put this large processing facility. No doubt, those high grade tons, 0.8 to 1% high grade bulk tons, are what is going to feed the initial mine plan for Costa Fuego.
And also San Antonio, you put out a maiden resource there.
Yeah, that's right. So Leo, it kind of gets lost when you have 927 million ton inventory. But look, these high grade gems or jewels that we have in our holdings, we are going to systematically start adding those into this mining inventory. San Antonio is the first. Valentina, where we recorded back in 18 some very high grade 2.5%, 8 meter wide zones on another underground. We'll be looking to bring those into the mining inventory. So San Antonio at this stage is just inferred 4.2 million tons at 1.2% copper equivalent, but that material is all shallow, very low strip ratio and from surface. So it means that it can probably feature in the very early production for Costa Fuego. And certainly if that was another copper company having an asset like that on its own, would probably be commanding a $40 or $50 million market capitalization in this environment. So, these are very important aspects to us. This is all really about building the front end of this mine to really de-risk it and drive high internal rate of returns and short paybacks.
I mean, you've mentioned a few times about the sort of coastal location of your project. Tell us a little bit about some of the advantages you have with regard to your location and the sort of access infrastructure and such.
Sure, Leo. And look, these are really some of the key differentiators. When you look at the crowd of senior copper developers globally, most of them are in the Americas. One of the reasons why Hot Chili went and dual listed over on the TSXV, because we found ourselves as a bit of an orphan in the crowd. We were the largest copper developer on the ASX, and nearly every one of our peers in the large end of this space reside over in North America and trade over there. So we corrected that, and we're trading that now on the TSXV from the beginning of the year. But what was very unique out of all of the senior copper developers, we were the only ones that were at low altitude. Most of our peers are at 4,000 meters altitude in the Andes, which means that CapExes are high, operating costs are high, and there's a lot of hurdle to bringing those projects into development. Comparatively, when you have a project that's sitting at less than 1,000 meters right next to a port on the Pan American Highway in the coastal range, you can imagine that you don't have very expensive $500 million water pipelines to build to bring seawater and desalinated water up into the Andes. And also the metallurgy on the deposit has been very, very favorable to us. All deposits are compatible to process with salt water. All deposits achieve better recoveries with saltwater processing, and that means that we don't have a very large scale desalination plant to build. What all this means is that Costa Fuego is about a half price project in the senior copper development space. $1.3 billion estimate to put out 100,000 tons of copper annually, 70 to 80,000 ounces of gold annually for a multi-decade mine life. That project, if it was up at 4,000 meters altitude with a desalination plant included, you'd be looking at a 2 to 2.5 billion US in capital profile.
And your ability to use seawater must help your ESG footprint significantly.
Yeah, exactly. And that's something we're really focusing on this year. We aim to roll out a full ESG structure around our pre-feasibility. Our new chairman, Nicky Adshead Bell, who is just joined to head the company. Obviously, a huge amount of experience in North American capital markets, but not least of all, a huge amount of experience in ESG investment and ESG positioning for what we're going to do. We sit in Chile, and Chile is one of the lowest carbon footprints of any energy grid in the resource countries of the world. It's first quartile. In fact, we can tap into the major node to the central grid 17 kilometers away, and we have direct access to power immediately. But it's power that we can buy from any provider in Chile. The Chilean grid is supplied by a huge amount of solar power, huge amount of hydropower and renewables. And what that means is that we can start to cater this as one of the more green projects going around the copper sector. And given that we're not talking about desalination, then all of the environmental issues with hypersaline water going back into the ocean, with high energy intensity to produce that desalination, we're looking at some very, very strong, certainly environmental credentials for the project. But on the S and on the G, those are the things that we're really also looking very positive on, and we'll roll out in the third quarter of this year once we've adopted that DIGB ESG structure to how we assess ourselves.
Fantastic. And obviously, that brings us to the timing of this project. You're looking to go into production just as demand for copper around the world is ramping up due to sort of the decarbonisation that we need to see around the world. Talk a little bit about the timing. Yeah,
Leo. 12 years of my life to get the project positioned to have almost the perfect timing into this copper cycle. We don't think it's about rushing to production now because copper is at $4.75. We believe copper is going higher. The energy required, the electrification of the world that is required for the decarbonization future that the world is pushing towards. Copper is going to be the central metal that enables all of this. Very hard to see where new copper supply is going to come from when discoveries have dried up, when Hot Chili is holding one of only 2 major discoveries made in the past 7 or 8 years in the world. And most importantly, the timeframes to bring on a major copper project, are upwards of 15 years. So even if a copper project is being discovered today, it is not going to see production for a very long time. Maybe the small scale assets may well play part of this game, but to bring on projects that are producing 100,000 tons plus, there are a handful of them, and none of them have the timeframes that Hot Chili have, and that is because we spent 10 years on our permitting, getting a water license approved, getting the easements put in place, getting the surface rights taken care of, studying all of our EIA so that we're ready to submit that in the first quarter of next year. This is where all of that work comes together, and this is where we really leapfrog all of our peers in the senior development space. And we're talking about production timeframes into 2026 and delivering this into project financing in late 24. So at the end of this year, we're very much looking forward to having that pre-feasibility complete and having the shape and structure of the project able to be articulated in project financing kickoff on those discussions.
Fantastic. Exciting times for the company. And as you mentioned, a very good time to be getting into production, possibly for copper. Thank you very much for joining us today, Christian, for that update on the company. And great to see you again after a few years.
Yeah, that's right. We'll hopefully enjoy a beer together sometime in London next time.
Fantastic. Thank you very much.
Thanks,
Christian Easterday, Hot Chili.